to Outlook Money's Wealth Wizards interview series, a special program where we interview experts and personalities who can shed light on how to understand and resolve money issues. I am Nidhi Sinha, editor Outlook Money, and our guest today is Mr. S Ramann, the new chairman of the Pension Fund Regulatory Authority of India. Under his leadership, we have seen a slew of reforms for the pension space and the NPS. Let us talk to him today to understand what these changes mean for us. Welcome, Mr. Ramann, to this interview, and thanks for taking out your time. In fact, ever since you've joined, there is a flurry of reforms. I mean, there have been so many announcements that our reporters are finding it difficult to keep track on the number of changes that are happening. And of course, the latest one is the introduction of the multiple scheme framework. So, what is the purpose of launching the MSF according to you?
Thank you for having me. Actually, the MSF is the reform. So, I think prior to the MSF, we really were in a planning stage. We were getting information from the ecosystem. We were reaching out to several different stakeholders, and I think the understanding was already there. It was more about causing that to become an sort of implementing the existing thought processes into a cogent action framework, and that is really what MSF is. It's about recognizing the fact that in this country there are not enough intermediaries who are going into the population in different subsegments and conveying the message and bringing them into the system called NPS. So, National Pension System is not for only government. Now, that was probably the thinking earlier. Moving from government to non-government and addressing the needs of a very large working population, we're talking approximately 50 to 60 crore people. That is really what is this bold reform, and MSF has a single sort of dimension or goal to bring the largest number of people in the non-government sector into NPS.
Right. In fact, the corporate take-up is not that much. But just talking about this MSF, like we have Tier 1, Tier 2 accounts already, and awareness about NPS is still low. So, I'm asking a very basic question from our readers' point of view is that will introduction of a separate set of schemes, like each PFM, the pension fund managers will have their own MSFs. Do you think it might create confusion, this extra choice or a larger bouquet of schemes under the entire umbrella of national pension system?
There are two parts to what you are asking. One, till now we did not have a dedicated, motivated sales force that was going into Tier 1, Tier 2. We're talking about a geographical reach. Right. We're also talking about different social sub-segments within even urban cities. So, who was taking care of a very large informal strata of society that exists in urban cities? So, between you and me, we probably have a set of 4 or 5 people helping us in various ways in our domestic lives. Right. Have we even questioned what is it that they are doing to save for their later years, for their retirement? Now, that has not been addressed. So, PFRDA has been coming out with certain schemes. These schemes apparently on the face of it look simple, but if you were to go into something called active and understand what all you are expected to do before you finalize the scheme called active, believe me, it's a very complicated process. how many people in this country can actually choose what percentage of their money should go into equity, government debt, corporate debt, and then also something called AIF. People don't even know what AIF means. So, in my view, the pension funds coming up with clear directed schemes is actually much simpler for the customer, because he is buying into one specific scheme which the customer knows is suited to them. We are also very clear that the pension funds need to have some guardrails to ensure that schemes are not missold. Now, that is something which we will have to continuously monitor as we move ahead, but the need for pension funds to carry the message, to be able to get their entire distribution network to be working that much more actively is really what we are talking about, the outreach. Till now, the outreach was very limited.
So, is it more about this distribution outreach that you're talking about? Because obviously these fund managers are big companies, they may have a larger set of distributors, etc. Or is it more about simpler schemes under this new framework of MS?
I would say it's both, but I would say it's the distribution that is primary.
I see.
Without a distribution network, no financial product gets to be sold. Let me take you back 15 years when I was at SEBI and I saw mutual funds. It was few and far between. Today, that same mutual fund has reached a particular level of popularity and reach. So, we should be looking at the fact that even before you take a mutual fund, you should be in NPS. NPS is really what lasts you for 15-20 years. So, that's why NPS zaruri hai. That NPS zaruri hai is more important to be drilled into everybody, saying that put away that 50 rupees every day. That's what will compound and become your life savings 20-25 years from today. Your immediate needs, whatever it may be, it could be education, it could be buying a television or a white good, a lot of those needs are actually met by people withdrawing from their mutual fund. But we would not like anybody to withdraw their money from NPS to meet such temporary needs. And therefore, NPS has also got a ability to make a partial withdrawal, but these are monitored and these are guided such that we don't have numerous partial withdrawals. So, it is highly restricted. So, I think the financial planner, and you represent financial planners in some way, they would also tell you that you must have a pot called pension pot which lasts you for your lifetime. And you should not disturb that pot very often. I think that's really what NPS is. Pension funds need to take that message forward to the larger population.
Right. But the other thing you mentioning withdrawal, in fact MSF has 15 years of withdrawal. The new changes in the Tier 1, Tier 2 accounts also kind of reduce that withdrawal period. And in fact you're saying that the financial planner community, when you talk to them, they think of 30 years, etc., which was something a part of NPS in its former avatar. So, this reduction of the withdrawal or exit years, do you think that's feasible in that sense?
No, I really appreciate that point, because it just points to the fact that everyone's requirement is so different. So, today we've got people who work for 15 years and are looking for not probably doing the regular 9 to 5 anymore. They want to do things differently. It's not that they stop working. In fact, even at 60, very few people stop working. So, what we are really doing is suiting or tailoring products for different pockets, for different needs. That is what these schemes are all about. So, yesterday we said you can only take your money out at 60. That 60 may be applicable to government, but it certainly is not applicable to the vast amount of or vast number of occupations in the private sector and people who are on their own. This country has more self-employed people than anybody else. Now, who is catering to their needs? So, what we are saying is that 15 years is a vesting period. It has really nothing to do with retirement. Keep your money undisturbed for 15 years and see the power of compounding is the only message that we would like to put forward.
But what my question was that it might not serve the purpose of retirement where you actually need money at 60 or 65 whenever you kind of decide to retire, because the minute you maybe withdraw a lump sum at, let's say, 45 or 50, you might put it in a business or something. A lot of people are doing startups, but the goal of that, pure goal of retirement from the financial planner's view kind of gets diluted to some extent. So is that a concern, or is it that because there is a bouquet of schemes and it's about choice?
So each person has their own goals, each person has their own retirement goals. We do not expect people to get out of the system just because 15 years are over. There are several plans, there are several schemes. We expect people to continue to remain in the NPS system all the way up to not only 75, which is what is permitted today, but there is an amendment that is on the anvil where you can even remain till 85. We therefore expect that, having seen the benefit of keeping your money invested for 15 years, you certainly will not leave the system. In fact, you will put your money in for another 15 years, is the expectation. Okay. And I think it's really about allowing people to plan their life in the way they think is best. We will also have schemes which keep you bound for 25 years. So pensions, the funds are given a minimum of 15-year period. It does not mean that every scheme will be for 15 years. You also have the common schemes where something goes up to 60. Pension funds have already come out with a scheme which is meant for persons who are approaching their retirement. Again, retirement is 60, but that's just a number. Such a scheme will take you on for another 15 years with the expectation that persons who are between 45 to 55 will also happily come into a scheme for a 15-year period, thereby taking them way beyond a number of 60 also. Such people have accumulated certain wealth. We would like them to see that wealth grow even further, such that when they choose to exit that scheme, they may be anywhere between 65 to 75, they will have that much more wealth available to meet various other needs that come up at that point of time, largely being health. So there are numerous schemes which are looking at helping people to take care of their health needs through their own savings.
Okay, so it is in a way, you take care of your intermediary goals as well with this, and if you don't need it, then you go ahead. Coming to other reforms, the consultation paper that is, up for public comment still about the kind of annuity products that are being envisaged. Could you throw a bit of light on those?
So this is the most challenging part of our work, and I'm happy that the team here has, risen to the challenge. We continuously hear of annuities not being really customer friendly. Not just in India, but this is also a worldwide problem. In fact, in the world, there is a philosophy that if you are not mandated to save in a pension scheme, you are also not mandated to buy an annuity. Now, this is the thinking in most developed countries, and therefore at a Viksit Bharat stage 20 years from today, we are also expecting that we should have schemes which look similar to what developed nations have today. And therefore, we are looking at providing alternatives. Our job really is, as we just spoke about the MSF, which is about giving choice, in the decumulation phase, which is when you convert your corpus that is saved into an income stream. We need multiple choices here also. Today we have annuity, and we're saying annuities, people seem to think are poor in their return on investment or the returns that they are getting. Why is it that this part of the industry has not developed to provide more products? So the simple thing we are doing through this consultation paper is throwing open a debate, saying can we produce income yielding products which look like pension, which can provide alternatives to annuity.
All right. So is it also about moving away from the insurance annuities on which primarily NPS, the annuity part, used to depend? So are these products will be developed as part of NPS?
Correct. That is certainly the aim. Annuity is linked to life. Now, a lot of people may take a view that I don't need to have something that is linked to my death. I may choose something for 5 years, 10 years, 15 years. I may decide to buy multiple products even as I go along. So, even at a 70-year or a 75-year stage, I may be well within my ability to buy myself an income yielding product for the next 10 years. So, it is about providing competition for financial products in this phase of life. And that is really what I believe we should gear ourselves up to, saying that annuities are there are even tenor based annuities, but can we look at other products which can bring in the inflation shield? So annuities typically do not provide that. So the innovation in one of the products that we have put out is that you will be able to have the same standard of living in each subsequent year, because you have bought into a pension product that is also bringing in the inflation indexation. So a lot of our ideas actually came from the way unified pension scheme was brought out by the government for the government employees, saying that we will provide you a inflation indexed stream of pension. So if that is something which is available for the government employees, why is it that we can't try and create that for the non-government sector? Yeah. And that is really what we would like to carry forward and have a debate. In fact, I'm sure even people like yourselves will help us in that process. And we should be able to come out with products which the pension funds can offer to their customers, such that a customer has accumulated money, he is now wishing to take some part of that accumulation and get an income yield from it.
So the other thing that I wanted to ask is that this whole thing of bringing annuities within the NPS fold. Insurance annuities, typically there have been complaints about low returns, the income is taxable, etc. So the entire concept of inflation hedging, etc. Where do returns kind of fit into this?
Sure. So the annuities are made based on certain boundaries drawn by the regulations of the IRDAI. We should not blame annuities upfront because they are a product of those set of rules. When you link payments to an uncertain event of life, there's bound to be various other costs that need to come in, because the service provider has to take care of a lot of uncertain, unforeseen events. Right. Longevity risk being the highest in that. What we are saying is, can we provide alternatives to annuities? So is it that everybody only wants an income flow all the way up to their end of life? It may not be the case. That is really where we are saying we can plug into innovations that are available in the financial sector in this phase of life, and we therefore took a lot of instructions and learnings from unified pension scheme which government brought out for its own employees, where the inflation shield was provided, so your inflation indexed for a period of time. That of course goes up to life. The learning is really that can we create products which pay out for 3 years, 5 years, maybe up to 15 years, without necessarily linking it to the uncertainty of life.
Right. But will the returns be higher?
That is something which the financial modeling will bring out.
One more thing that I want to talk about is tax incentives, which you also mentioned can help NPS. But now it's a given that the government is pushing for the new tax regime where there are no tax incentives, so to say, deductions. And of course, in the new tax regime, there is a part for NPS, but it is primarily for the employer's contribution. It is not that much which one used to get under ATC. So, is there any kind of plan or?
So again, let me go back globally. Nearly every jurisdiction has some tax incentive for long-term savings. And the equivalent of pension savings in a lot of jurisdictions that we studied, all of them have a tax incentive. So the tax incentive is actually linked to the larger development of the economy, because such long-term savings, where do they go? They actually go to long-term paper. So the long-dated paper of 35 years or 55 years, which is from the government sector, so the GSECs, long-dated GSECs, are nearly entirely bought by pension funds and insurance funds. Second, in India we have a particular need for infrastructure development. We have a lot of very good work happening in that area. We have 25-year paper coming from infrastructure sector. Now, my understanding is tax is a way of channelizing the savings into productive areas. And I would really say that the introduction of tax incentives, even under the new regime, clearly should be linked to the fact that this money which is saved needs to get channelized to the productive areas, primarily within which infrastructure would be the main area that we should be able to put our money into. So the role of PFRDA to transform savings into investment and make that investment go into areas of importance, that's really where I would see the tax incentive coming in.
So you would really want a larger tax incentive even under the new tax regime?
It certainly would help. It certainly would help, both from the customer's long-term saving point of view, as well as from a development of the economy.
Okay. From the sense that I'm getting from your conversation is, of course, distribution, awareness and all of that is, on top of the agenda. And it is very heartening for us that, non-government employees, NPS is reaching out to non-government employees through MSF, etc. But is it also because of this UPS coming in that this focus has kind of changed towards non-government? Because until now, the take-up in, among corporate employees or employers has been pretty low, which has been a matter of concern.
So I think it's not probably, so linked to UPS. UPS, as I said, gave us a insight into how products can be created which are income yielding. But APY is another very important learning for us. So under Atal Pension Yojana, there's been a great outreach. I think that has given us probably, more encouragement to be able to use the distribution network to make the outreach for NPS also. So whether it's the set of banks, whether it is the common service center, various other digital distribution channels which have come to exist. So platform worker is actually a digital channel to reach large number of contractual employees who are part of a digital network. So this is really what we have to use very well and make sure that NPS as a product reaches much wider audience.
But has it had an impact, because of course the last date is now extended for opting UPS for government employees, but do you think it has had an impact on NPS in any way?
No, no. So I think, UPS is nothing but NPS plus.
Yeah.
So, there is...
No, but there's a choice between them.
Yeah, but NPS is enshrined within UPS.
Okay.
At some point, if people believe that they don't want to take a pension from the government system, which is what UPS is offering, that choice has been given to them to take the entire amount and go out under NPS. Now that's a decision which each person may take at some subsequent stage of their life. But the sense is that given the longevity risk, given the fact that a pension is available with an inflation indexation, it is a decision which might go in favor of taking a pension, because it's always better. But that's something which we have to leave to the person. But moving to UPS, because it already has the option of NPS in it, is a no-brainer. So I would expect people to definitely use UPS.
Right, especially the older employees, that's what I'm hearing. The younger employees might be better off with NPS.
I frankly don't think so. I mean, yes, I'm part of the older employee crowd, but people have not seen the equity markets go up and down. We've seen it. We've seen 3 cycles of that. So, the younger persons may believe that the markets are only going to go up, but I think we have to have enough caution built in. So it's really for, the point is that when people see another 15 years play out, at the end of which their decision may be whatever it is, but it's a better informed decision.
As a government employee, what have you chosen, UPS or NPS?
So I'm not, sort of a government employee anymore. I had to take technically VRS, but we are under the old system. So,
you are under the old
choice
pension
does not
system.
exist with us.
Right.
But I would certainly go for UPS, without doubt, because of the fact that people are living longer and therefore the flow of a steady pension income, inflation indexed, will always hold me in a better state.
All right. So NPS for non-government employees mostly is the message that I am getting.
But NPS now linked with some pension payout system, which will again, help people to tackle the inflation. So I think inflation is the biggest sort of challenge for, people to lead a life which is reasonably similar to what they have led earlier. And therefore protecting people from inflation is a challenge that we are ready to accept, and we should come out with something good.
And that's very, very important. Is there anything else on the anvil now that you have come up with so many reforms, but they don't seem to be stopping?
So I think we are really trying to bring in the entire, let me say, from Vatsalya to the income yield that you will get at the stage of retirement or in your latter years. So you're talking about a 50 to 60, maybe a longer period of engagement with the NPS, and that is really what I think goes back to the tagline that NPS zaruri hai. So it is really available to you right across your lifespan. And we still have one more thought where we are saying, how do we make the transition from NPS, from me to my kith and kin, as a succession plan? So that's another very important thing which we are talking to some of the people who have experience in these products, that we should bring in the concept of succession plan happening through the NPS system itself. So whether it's a will, whether it is in some other form, but we today have an excellent digital backbone which is evidence based. So it is actually, if you were to look at from a legal perspective, the technology law read with the Evidence Act, it's all available there in our digital backbone. So the CRAs, which are really holding the information, are an ideal vehicle for making sure that all succession plans are also back-ended onto NPS. So I think that's another part which maybe it's for the next step.
That's interesting. We'll be looking forward to it. So coming to the end of this interview, Mr. Ramann, what will be your recommendation to new investors or maybe younger investors who may not be able to think about retirement in advance?
So, I mean, I think it's very, very simple that, instead of spending that additional money on a, aerated beverage or some such thing, put that money, 50 rupees, 100 rupees on your mobile phone and just put it onto NPS. The ability to take these, random decisions of saving is what has been enabled by our digital economy. And so the mobile phone with the rest of the digital infrastructure that we have makes it easy for people to save. I think the message that I would like to be carried is saving is an important feature of your daily life. So whenever you get the thought that I want to save, kindly press 3 clicks on your mobile phone and you will be able to save in NPS. And I think that is really the larger message, because when you save in this manner and you are not entitled to pull out that money at will, you are going to see the benefit of the power of compounding.
But which scheme would you recommend to them now that there are so many?
No, I would say any of them. Okay. Frankly, it really doesn't matter which scheme you put in. If at a younger age you are looking at a higher growth, then obviously you would probably be more equity focused. So you would put your money into a high equity scheme. But the larger message is put it in, blindly make the saving and don't take it out.
Yeah. Which NPS will not allow?
Let me just give you the example of NPS Vatsalya, which is a great scheme meant for children. Yeah. Typically the parents or the grandparents would put in the money. When you look at it from a growth perspective, assuming today's growth rates, you will see the power of compounding happening on that NPS calculator. So pull it out and have a look. It's quite fascinating to see that money put in every month, say 3,000 or 5,000 every month, can translate into some enormous returns purely because you're not disturbing that money. So I think that is really the message to today's new, the Gen Z as they call it, that don't lose the opportunity to save. As much as you want to spend, but the saving is really the flip side of the coin, because that's going to give you the spending power for tomorrow.
Okay. Thank you so much, Mr. Ramann, for your time
Thank you.
and this informative conversation.
Thank you so much.